my father, as you mentioned, Sanjay Bhargava, he is a first principles thinker. And he's actually gotten that way by working with Elon Musk very closely. So he worked at PayPal and then most recently Starlink.
This is 3 degrees to Elon Musk, right? Saying you, Sahil, and then Elon Musk. So folks, there you go.
Exactly.
3 degrees to Elon Musk out here. Who knows if he's hearing this.
So you'll basically log in, sign up, declare that you're an existing investor, give us the emails associated with your mutual funds, and we fetch the statements for you, and you just have to upload them into the system. And then the system goes into work and basically goes through your entire transaction history. We request your entire history because we can give you the most insights if we have your full picture. The ideal customer for me is someone that never thought they could manage their portfolio themselves ever. And my goal at Bharosa Club, our goal at Bharosa Club, is to convince them that one day they can. And I don't expect that change to happen overnight. It's very difficult. I recognize that. But 2 things are going to happen. One, they're going to get data that they've never seen before. That makes it easier. 2, we are going to get better and better at improving the simplicity of our platform over time. 3, they are going to get more confident as they study this and spend some time with the portal. So my wager is that for that customer, they're going to start by just looking at the data. Then they're going to start asking questions to their advisor that they never would have asked before. Just that will create improvements. Eventually, they're going to feel confident enough to say, I don't need my advisor. And that's when we've really done what we want to do.
Sahil, welcome to Paisa Vaisa. Thank you so much for doing this for our listeners.
Thanks, Anupam. Delighted to be here. Big fans of your podcast.
Thank you so much for your kind words. I like that this is a family affair. We would have got Anita, your mother, on the show, but thanks to some last-minute programming bleep-ups, I can't use certain language out there. We missed out on that, but that would have been a great combination. Yeah. This has been, the Bharosa Club has been founded by Sanjay Bhargava, your dad. Let's start from there. Let's talk about when it was founded, why it was founded, and who exactly is Sanjay.
So my father, as you mentioned, Sanjay Bhargava, he is a first principles thinker. So what does that mean? It means he sort of evaluates things from the beginning, right? And he's actually gotten that way by working with Elon Musk very closely. So he worked at PayPal and then most recently Starlink. And Bharosa Club was started in 2015, 2016 as a passion project. And the main thesis behind it was that financial products are being distributed in a manner that is not good for the end customer. And can we change that? So that was the mission of Bharosa Club. I got involved about 3 years back when my father and I spoke about taking this passion project and making it a scalable business. So that's kind of a little bit of background on how we started.
I'm thinking this is 3 degrees to Elon Musk, right? I'm saying you, Sahil, and then Elon Musk. So folks, there you go. 3 degrees to Elon Musk out here. Who knows if he's hearing this. Your background and how the idea of Bharosa Club came in. Let's kind of just jump into that now.
Sure, absolutely. So Anupam, I've been very fortunate in my career to work in different seats across finance and in different geographies. So my career started in the US and I spent a lot of time in investment banking first and then on the buy side. So actually evaluating investment opportunities. So I worked at a private equity fund called Apollo Global Management, one of the largest funds in the world. And then worked at a long-short public equities fund as well, a space that you would know well.
Yeah.
And then moved back to India in 2017 and had the chance to examine the retail business up and close because we worked, I basically helped start a affordable housing and MSME lender that's called APAC Financial Services, which is now, a blossoming company. So after that, I then took on Bharosa Club because this unique positioning across the market really revealed a truth that my dad had been speaking about for a long time, which is the extent of poor decisions that are occurring in the personal finance market. And it's something that we're very passionate about as a family because financial products are probably one of the most important products a customer buys, but they're really at a loss of how to buy them properly. And the difference between even minuscule decisions can end up being very impactful in the long run. So that's kind of the driving thrust behind our business.
Yeah, I'm thinking this started in what, 2015, 2016-ish, right?
Yeah.
So I'm just thinking that 2015, 2016 is just about the time just before, Jio came in and you had that whole data boom, etc., etc.
Sure.
This was also around the time when a lot of fintech startups came in.
Yes.
All offering kind of, I think if I got it right, the ecosystem in fintech is like, you've got investment, you've got loans, you've got this, and you've got, there are just a few blocks that you can do out there, given that regulation in India is quite tight.
Yes.
On at least on the banking and the lending side. So everybody jumped in out here. And we've had a lot of guests in fintech on Paisa Vaisa. What are you doing differently? Okay, because we are in 2023 now.
Yeah.
You're probably about 6-7 years old, although I believe that the real momentum has picked up only recently. Let's talk about, how when you came in, what you found wrong in the system, where you thought that there's an opportunity, and let's look at it from there.
Sure. So I think the biggest problem in financial services right now is that it's viewed as a business where you have to sell something to the customer. When I think that's the wrong approach to use, because financial products are products that carry a lot of benefits when used correctly, but when used wrongly, they can cause a lot of damage, right? And so in a market like that, selling can be very pernicious and dangerous for the customer. So why is it that a customer does not make their own decisions in finance? The products are complicated. Measuring the paisa that you spend is very difficult. Like, I'm willing to bet none of your listeners know how much they're paying in their mutual fund portfolio, because it's a very complicated calculation. And then measuring the value that a mutual fund is delivering you, also very difficult. Every fund has a different benchmark. Every fund has a unique time that you entered it, maybe exited, maybe entered back in. So how do we actually measure if that fund did a good job for you or a bad job? It's not just the rate of return the fund gave you. It's the rate of return relative to a benchmark. So what makes us different is that we're really trying to focus on empowering the customer to make their own decisions by showing them data that they should have gotten all along, but that they couldn't get because it was too difficult in the past. Tech has changed the game. Now they can actually get that data and improve their decisions.
Yeah. Let's make this real. Let's say that I'm someone who has a fintech app on my mobile.
Sure.
Okay. And I have started an SIP on it and I'm going along absolutely fine. They show me my performance. They show me my returns. Benchmark is doing this is doing that, blah, blah. Very standard thing, which I think a lot of the apps do nowadays. What do you do different?
Yeah, so we give you context around that number. It's not just your rate of return. You understand how that rate of return compares to the market. And you understand if these funds are beating or underperforming the market. Because what really matters in finance is not just your absolute return. I'll give you an example. If you were getting a, say, 5% FD 2 years back, that would have been a great rate. You would have been happy. Now, if you're getting, a 5% FD, that's not a great rate, right? Yeah. So your return has to be evaluated in context. Bharosa Club gives you that context. Our technology does the hard work of telling you, are you getting Paisa Vasool or not? And if you're not, it gives you insights in how to improve your portfolio.
Okay, so you spoke about relative performance and, you gave a very good example of how, say, 2 years ago, you'd get a 5% FD. Today, you're getting probably a 7% FD. And how does that impact you, et cetera, et cetera. And the two things that I remember from what you spoke before, one was relative performance and the second was costs. And I know what you're talking about because when my mutual fund account statement hits me, I have no idea what I'm paying to whom. Yeah. Okay. And that's because that's the way the product is structured.
Yes.
Okay, let's go deep into this.
Yeah. And so, it's structured this way because it's very good for the manufacturers who produce the products, and it's very good for the advisors that sell the products, because they essentially are able to say, look, you don't need to pay me a dime directly. I'm getting my fee from other sources. And that's a totally fine structure per se. But what it does is it removes knowledge from you. And that's very dangerous because you don't have the ability to monitor and track the payments and assess whether you're getting Paisa Vasool or not from the advisor, from the manufacturers of the mutual fund. Just like you wouldn't hire a contractor to renovate your house or kitchen without knowing how much you're paying them. You shouldn't be hiring a mutual fund or advisor to renovate your financial portfolio without monitoring them. And so Bharosa's technology tells you that. It says, this is how much you spent, this is where it went, and this is how that person or that fund has done for you. So you can use your judgment to see whether you want to continue the relationship or not.
Okay, can we get a bit more, just drill this down in data terms. Let's say that I've got an SIP that's going on for 12 months and it's given me whatever, let's say 12% return and
Sure.
the index has given me 10% return.
Yeah.
What's the real picture out here?
Yeah, so essentially, one, it's not as simple as just that, right? Because that SIP occurs over time. And you may have benefited from the fact that you structured it as an SIP, or you may have been hurt by the fact that you didn't do a point-to-point return. Our technology actually goes in and mirrors your transactions. What it does is it says, okay, Anupam has been investing every month. So to analyze whether he's getting Paisa Vasool or not, we need to also replicate a portfolio that invests every month and not by his funds, but by his funds benchmarks. Then we're able to compare those two portfolios and say, was that 12% return really good or not, adjusted for everything that Anupam decided to do? And so just looking at a point-to-point return is not going to give you that answer. And you really need to assess it with this lens.
Very interesting. There are two concepts that I want to get into, which I think are the core of your product, right? The first is the fact that you call it the Bharosa Club.
Yeah.
Where you could have called it some fancy fintech name.
Sure.
I have no idea how they named them, but you could have come up with something like that.
Yeah.
And the one phrase or one term that I love that you're using repeatedly, and that also is very close to a podcast,
Yes.
is Paisa Vasool. Okay.
Yeah.
So why the Bharosa Club?
Yes.
Okay. And why Paisa Vasool?
Sure. So let's start with Bharosa Club. What does a club imply? So if you think of the clubs that we're used to in the marketplace, right? Bombay Gymkhana or any kind of club that you see, it works for its members. And that's a very important concept. Bharosa Club makes its revenue solely from membership fees. We're not taking any money from manufacturers or any other sources. So what does that do? That basically tells you that we work in the interest of our members. We have no right to exist unless we constantly deliver more and more value to our members. The other concept of the club that really resonates for us is that other people in the club can help each other out. And that's something that we want to do down the line. It's not yet a feature of Bharosa Club, but that's very much the direction that we're going to be moving. And in terms of Paisa Vasool, we realize that finance is very complicated. And there are reasons for that. People profit from that complexity. But we realize to make things understandable, we have to put them in frameworks that people understand intuitively. And Paisa Vasool is one such framework. We know how to buy toothpaste. It's a simple product. We also know how to buy a television, which is an amazingly complicated product. But why do we not know how to buy a mutual fund? It's because the Paisa and Vasool are not made clear to us. So that's kind of where the Paisa Vasool concept came from. We realized if we could do that for mutual funds, we'd be hitting a nerve and people would understand how to interpret the data.
Yeah.
So we framed things in a way that people understand.
Okay, Sahil, let's talk about the onboarding process and whether you introduce an element of risk profile. Do you take new portfolios or do you only work with existing portfolios, etc.? Let's talk about that entire process that you guys do.
Sure. So I'm going to start with the new portfolios and what our offering is for that and what the onboarding flow looks like for it. So essentially, a member who signs up, first of all, it's as close to single click as possible. So you don't have to type in mutual funds manually and all that stuff. We essentially get all your data from your cash statement, which we request for you. So you'll basically log in, sign up, declare that you're an existing investor, give us the emails associated with your mutual funds, and we fetch the statements for you, and you just have to upload them into the system. And then the system goes into work and basically goes through your entire transaction history. We request your entire history because we can give you the most insights if we have your full picture and how your investing profile has looked over time. So that is essentially how the flow works. Once your transactions are analyzed, which happens in a matter of a minute, you'll get your information. And you can refresh your statements at any time, and if you've made transactions, they'll be updated for you. And so all the data will be current. And so for new investors, we also have an offering which helps them get started. So there we have something called the investment playground, which helps you understand how to set up your SIPs and lump sums and get an investment profile that fits you.
Okay, so if any of you are wondering out there that what exactly is a CAS, Sahil, you want to just fill us up on that?
Yeah, sure. So CAS stands for Common Account Statement. So India, as in many cases, is way ahead of the curve in terms of data collection. So, the infrastructure that we have is best in class and, absolutely world class. So anytime you execute a transaction in mutual funds, the registrars that record that transaction collect all that data into something called the common account statement. And you can always request your common account statement at any time.
From
CAMS online or KFintech. There are two sources that give you the CAS statement.
Yeah. So I usually get mine from NSDL, and I think I have another account in CSDL. So if you guys want to download your CAS or you've never had access to it, just look up. Like Sahil said, you can go to CAMS or you can go to KFintech, which I think is Karvi Fintech, or I think it's called KFintech nowadays.
Yeah, they changed their name.
Yeah, and you can actually download your CAS. I think it's totally free. There's no
totally
charge.
Totally free, no charge.
Okay, and that should show you a record of your investments into mutual funds. I think it's stocks also. But anyway, I like this part in your website that says our technology is the best in the world and helps you both improve performance and reduce taxes.
Sure.
So that makes you more. I'm sure that gets, that's basically the Paisa Vasool part.
Yeah.
But there's a lot to unpack out here, especially since you also have been talking about your technology even in the first part of the episode. So can we just jump into what exactly is the technology and how does it work?
So let's revert back to that example that you gave with the SIP and the 12% return that you see on a fintech app. And you may even see a benchmark that they give you that says, you're doing better than the Nifty 100 or the Nifty 50 or some benchmark. Now, why is that not sufficient, right? So one is everyone has a differentiated portfolio. Is the Nifty 50 the right benchmark to be using for your portfolio? Chances are it's not, because the only time one single benchmark will be the right benchmark to use is if all your portfolio is tracking one benchmark. What actually happens is every mutual fund by law has to declare which benchmarks it is trying to meet or beat. And what Bharosa Club's technology does is we go through your portfolio and every fund you own, that you have ever owned, you may have exited it, but we check essentially what is this fund's benchmark. And we, again, replicate everything using benchmarks so that you have a very clear picture of how you did on a relative basis. Was your 12% good? Your 12% may have been good, but if you invested in small caps where the return was 18% over that period, then your funds actually have been destroying value, not creating value. You would have been better off just buying a small cap index. Or your 12% may have been fantastic and your funds may have done a great job. Either way, you need to know the answers to these questions. And that's kind of what we enable you to do.
The answers to the questions. Okay, let's say that I'm someone who's got maybe 5, 10, 15 folios or, mutual fund investments account across very different schemes. And I give you the CAS or you access my... Oh, which reminds me, you just take my email address, right? I mean, you don't take access to my email, right? A lot of people kind of also jump into that. Okay, that's good. So you've got my CAS and you've seen how I've invested over the last 4-5 years.
Sure.
Sometimes I've started something, sometimes I've stopped something, sometimes I've bought, sometimes there's a whole... What is the output that you offer to me? Once you've got all this intelligence with you, your tech goes through it. What is the output and the recommendations that come to me?
Yeah, so we have a couple of outputs and it all depends on how much of a data junkie you are. So the way we've designed our system is that it's not a requirement to be a data junkie to use it. We have something called the Bharosa Insights, the Paisa Vasool Insights, which basically do the hard work for you and basically give you a short list of funds that we think you should take a look at potentially exiting, right? Now, we don't have a crystal ball. We can't tell you for sure whether it makes sense to exit these funds or not. But using our math calculations, in great likelihood, these are funds that you should probably look at getting out of. Now, how do we do that calculation, right? Because there is a cost to exiting also. When you exit a fund, you trigger capital gains, right? So we weigh the tax that you're going to have to pay against what we estimate the incremental performance you could get in the future is. And when one is way larger than the other, that's when it makes that list. So that is perfect for someone that doesn't want to mess around with the details, right? But our technology also gives you all the details because we know a lot of people are data junkies and we know that people can also disagree with our analytics. We may say, this may not, our math shows that maybe this is not a great exit, right? But you may say, no, I don't think this fund is going to do well. Or you may say, no, I think this fund has done badly, but it will do better in the future, right?
So I can override your recommendation.
You can always override our recommendation because it's data. It's not actually advice, right? What we're doing is making it easy for you to make the calls. So that's kind of the way the advice is portrayed to you. Another thing that we do that's very useful and people like is give you a very simple way to keep tabs on your fees. We have a running line chart that shows you since time immemorial when you started investing, how have your fees trended? So the goal is that once you use our technology, those fees come down. And we just launched this tech about a month back. And I'm happy to say it's caught on. We're already at around 250 crores of AUM.
Nice.
And the best part about it is our early beta customers, have actually seen dramatic improvements in their portfolios. Basically seeing their costs come down and their Paisa Vasool improve. And that's really why we're doing this, right? To drive those outcomes.
Very interesting. So it's when you say that over time costs come down, I can only think of passive funds. But on a broader basis, how do you figure the fund? In the sense that mutual fund performance is notorious.
Yeah.
I mean, there's enough data out there, whether you take it from Spiva or whatever it is that says that active is dead and passive is the way to go, etc., etc. What are your thoughts on that? Because the funds that you're recommending now to me, let's say, in this quarter, could just reverse after a few quarters, after a few years.
Yeah.
Whereas I've been told that I'm supposed to hold on over the long term and that's when things will happen and stuff. What do you think about that?
It's a fascinating question you're asking, Anupam. I think both active and passive have a role. That being said, when you look at the penetration of passive funds in India and you compare them to the penetration of passive funds in the US, there is a stark difference. Passive funds comprise about 10% of AUM in India, and it's actually probably less because a lot of the institutional AUM sits in passive. So when you look at it on retail, it's probably even less than 10%. When you look at that number in the US, it's 50%. Why? Well, historically, active has done very well in India, but that's changing. And investors need to change their portfolios to catch up to the new reality. And Bharosa's tech helps you do that by identifying the active funds that are not keeping up with their promises, right? And yes, a lot of that fee reduction comes out from rationalizing that. When you move from active to passive, you get that fee reduction, right? So how I personally recommend a investor design their portfolio is for the bulk of your assets, try to track the market with passive. And by bulk, I mean 50-60%, because you're getting a huge cost advantage there and you'll keep pace with the market. And then based on how much you enjoy active investing, a lot of people love it, right? And they shouldn't stop. But they should make sure that they're not betting their entire corpus on investment styles that fall in and out of favor. My heritage is coming from active investing, but I also know how difficult it is, right? And so you just need to monitor it. And that's what we let you do.
You said 250 crores and I don't know what the number of investors are.
Yeah.
But the question is, who is your ideal client?
So it's about 350 customers right now.
350 customers and about 250 crore plus, which is really impressive. Who's your ideal customer? Like if there's someone listening to us out there, and what would be your suggestion to him?
The ideal customer for me is someone that never thought they could manage their portfolio themselves ever. And my goal at Bharosa Club, our goal at Bharosa Club, is to convince them that one day they can. And I don't expect that change to happen overnight. It's very difficult. I recognize that. But two things are going to happen. One, they're going to get data that they've never seen before. That makes it easier. Two, we are going to get better and better at improving the simplicity of our platform over time. Three, they are going to get more confident as they study this and spend some time with the portal. So my wager is that for that customer, they're going to start by just looking at the data. Then they're going to start asking questions to their advisor that they never would have asked before. Just that will create improvements. Eventually, they're going to feel confident enough to say, I don't need my advisor. And that's when we've really done what we want to do.
Man, I've a ton of questions just going by this answer of yours, because The ecosystem or people that have come on this podcast, there are two types. When I ask them this question, who's your ideal customer? One will tell me that they're looking at newbies. People who are absolutely new, don't know where to go. Okay, we got you. We kind of got you covered. Don't worry, you have to do this, you have to do that. Start an SIP, blah, blah, blah. And the other, I've got people who are sophisticated.
Yeah.
People who know what's happening out there, who've invested, who've done the whole FD mutual fund route and are looking at, maybe getting that extra 1% in the portfolio, extra 2% in the portfolio, etc.
Yeah.
You're here telling me that I'm here to make people more confident of themselves.
Yes.
I don't hear that very often. Why is the ecosystem not letting us do this?
Yeah. So I think let's actually look at what this subject is called. It's called personal finance.
Okay.
Why? Because it is personal to you. If you can make your own decisions, no one can do it better than you, right? And why is the ecosystem not doing it for you? Because the ecosystem's incentives, unfortunately, are not related to your performance. They don't get paid on performance. There is a very defined incentive structure that works in the market. Advisors either get paid a flat fee, which is the minority, unfortunately, because it is a better system, or they get paid a hidden fee from your returns, which you don't even know, which we spoke about earlier. Now, when someone earns their bread and butter like this, even if they're the most honorable person, if their livelihood depends on essentially commissions that are paid on funds, they're not going to have your best interests in mind, right? They're going to put you in funds that give them a reasonable commission. Where's that commission coming from? It's coming from your hard-earned savings, right? So the ecosystem works to sell products that are complicated and works against you in that fashion, right?
Now, I want to ask this from the other side of the table.
Yeah.
Okay, first we looked at the ecosystem, which is people who are manufacturing it, people who are selling it, people who are advising it. Where is the thinking in the investor side slightly off? One thing that I personally feel a lot about is, the whole obsession with returns.
Yeah.
Okay, which I feel is, I don't think that's point number one. But that's how I feel. And I'm perfectly fine with other people having their own perspectives. The other thing is, getting into debates that are generated by social media. Active versus passive, buy versus rent, blah, blah. Arey bhai, like you said, personal finance, my money, no?
Yeah.
Let's switch sides. Okay, you spoke about this from the manufacturer and the advisor side.
Yeah.
What do you think needs to change out here?
Yeah, it's a great point, and that's a key part of the equation. I agree completely with you, Anupam, that the sole focus on return is totally misguided, because what investors tend to do and be influenced by, you'll go to a party, one of your friends will tell you, oh man, I made 40% on Dogecoin in like a week, right? And you'll hear stories of this and you'll get FOMO, and then you will get into Dogecoin and you'll be unlucky and you'll lose 40%. And then you'll say, I'm never going to do this again. But then you'll do it again, right? That is human psychology. And that's why I think the right amount of active is not zero. Look, you cannot ignore our psychology. We want to try to beat the market. And some people can, but it's a vanishingly small number, that can. But it's fun. Just like going to a casino is fun, right? But don't bet your entire corpus at the casino. That is what we're trying to say at Bharosa, and track how you're doing. If you're doing great in your active portfolio, keep doing it, but have the numbers, right? And Bharosa will give you the numbers so that you can use your judgment and say, okay, I'm really good at this. I want to keep doing active. I don't want any passive, right? So I think you're totally right. Less focus on the absolute return, more focus on the relative return. 2, becoming more long-term oriented. This is not something to judge on a year-to-year basis. This is something to judge on a 7+, 8+ year basis, especially in equities, because that is when logic prevails in the market. Any year-to-year thing, you have no idea where the market's going, right? As you know very well, right?
I'll just probably add, with your permission, I'll just add one word about how you said about it's not about absolute return, it's about relative return. Can I just say relevant return? Okay, you think that, that kind of adds a nuance, because, let's take an example of someone who bets on India's infrastructure and just puts all his money into some, cap goods and everything that you can think of on the India side.
Yeah.
Completely ignores, say stuff like IT, stuff like commodities or whatever it is, which is more global.
Right.
I don't know how he's going to compare it to the Nifty.
Yeah.
Okay, and then say that I beat the Nifty, which is why I just thought that should we add relevant also.
Yeah, absolutely. And that's the hard part.
Yeah.
Calculating that relevant. You're right. It's really knowing what the right measure is.
Yeah. Okay. So I saw your website. I just want to figure where you are. And this is again a very standard question that I asked to my guests. Where are you on the regulatory framework?
Yeah.
As in, do you have an RIA license as per SEBI, or are you a MFD as per AMFI, or whatever it is? Where are you on that spectrum? And of course, going forward, what happens?
Yeah. So we do have an RIA license, but we do not use that RIA license for a current offering. So why is that? Because we're not giving advice, we're giving data, and we're empowering you to make your decisions for you. Now, why are we holding that license, right? This is the next logical question. I think what we're seeing in the market is an opportunity to basically give good advice, right? Because our tech makes it possible for the customer to measure improvement for the first time ever. You can actually see if your advisor is delivering you Paisa Vasool or not. So I'm very intrigued by the possibility of building an RIA on top of that is focused on actually making itself redundant in the long run, right? Convincing you that you don't need us.
Yeah.
You can do this. But in the hand-holding stage, we'll hold your hand and get you confident to do it, right? And you'll be able to see your portfolio improve over time. So that is something that we're not doing currently, which we're thinking about whether we want to do it, but ideally we'll find a partner who's already in this RIA business that finds this interesting and sees the opportunity.
Very interesting.
Yeah.
The most obvious question, costs.
Yeah.
I mean, what does it cost me to get this experience? And are there any... let's just get into that.
Yeah. So as a club, our ability to add value is proportional to how big we are. Right now, all we can offer you is technology. If we have a lot of members, we can offer you a lot more than that. We can actually work with manufacturers to create better for you products. And since we're a club, we will do so for free. We will distribute those good products for free. And all those savings will be passed on to our members. That is our ambition. But we do not have the scale right now to do it. 350 members is way too small to do something like that. So we are pricing ourselves to get very big. So you will always see attractive pricing at Bharosa Club, which makes sense. If we're a club focused on getting you Paisa Vasool, if we are ourselves not Paisa Vasool, you should run for the hills, right? So the current pricing we think is very attractive. It's free for people with portfolios less than 5 lakhs. Now why? Because we want even newcomers to be using these tools, right? Because we're confident that eventually these newcomers will be over 5 lakhs, right? So we're not doing it out of charity. We're doing it because this is a good bet. If you use things to properly manage your finances, your portfolio will grow. And for portfolios above 5 lakhs, it's only 1,000 rupees for an annual membership to the club. That's an introductory pricing. It may go up, but for the foreseeable future, it's 1,000 rupees.
And does that include 18% GST for this? You have to just specify that for listeners.
It includes 18% GST.
1,000 is all in.
Yeah, all in.
Oh boy. Okay. I really wish you all the very best, Sahil. I hope that you guys take this product. I remember, and of course, your dad was Deepak Shana. If you're listening to this, shout out to you because I came to know of Sanjay through Deepak's Capital Mind portfolio, and he was, he's got so much of energy here. I mean, first there's that, and his thoughts were like, I was like, wow, okay, and before I knew, the guy's already started something. I was like, he believed in something and he started this, and it's so good to see that the idea has developed till now. I hope that you take it further because I honestly haven't, I just feel this is really aligned to giving people the power that they need.
Exactly.
Which in fact reminds me, are you open to newcomers also? Like, I don't have any portfolio. This is my first day, and I please just help me set up an SIP or whatever it is so that, I can do what people are doing. You guys help me on that. Yeah,
we do, Anupam, but to be frank, our offering currently is, I think, could be better for newcomers.
Sure.
Okay. And that's because we have a small team. We're trying to keep our costs low so we can operate at 1,000 rupees. And we saw a path to adding value for existing investors quickly. We have some offerings for new investors, and because it costs you nothing, I encourage new people to try it out and give us feedback.
Yeah.
What do you want us to build? We work for our members. So I think we have some ways to go on the new member side, but please give us a try and let us know what you want. And we will work our best to build it.
Do you have an app, or is it website based, or is it?
Right now it's web-based.
Right.
The website works well on mobile, but an app will be coming in the next, say, 5 months or so.
Fantastic. And, come back for another recording once the product is established, it's settled. Folks, the Bharosa Club, THE, that's the Bharosa, BHAROSA Club, is, you can just Google it and you'll find it. And there's a lot of helpful videos that Sahil has done online. Yeah. So if you guys want to go beyond this episode and you want to learn more, then there's tons of stuff out there. Yeah. Each, YouTube video is about an hour plus.
Yeah.
So there's all the details are out there. You want to just talk about that?
Yeah. So we have a YouTube channel which does a lot of financial literacy videos. I focused on trying to make complicated topics as simple as you could without omitting parts that people need to know. So you can check it out at our YouTube channel, Bharosa Club. Yeah.
There you go, folks. And the last bit of our episode, Sahil, my favorite question. Yeah. Are you reading any book? You have any books that you could recommend to our listeners?
So 2 books,
Anupam,
nice, and I love this question because it's a great thing. So the first book is a book by a guy called John Bogle, who I'm sure you know. He's the godfather of passive investing. And like I said, I don't have a horse in this race, but I do think passive is under-indexed. So I think your listeners could benefit from reading this book and reading the case of why passive deserves a place in your portfolio. Not 100%, but a place. The second book that I think is really, really good is Fooled by Randomness by Nicholas.
Taleb. Nassim Nicholas Taleb,
it's a fantastic book.
Yeah, one of your favorites?
Yeah, because I feel like intuitively we struggle to understand probability, right? And this book shows you how difficult it is to make good financial decisions when you have the overlay of probability.
Yeah. So, folks, there you go. The first recommendation was a book by Bogle. Sorry, then what's the name of the book?
The Little Book of Common Sense Investing by John Bogle.
The Little Book of Common Sense. Gotta love the title, huh? I mean, you can't.
It's a tongue twister.
The Little Book of Common Sense Investing, but it's also a very obvious name. Yeah. And of course, an all-time classic. And how have you not? I mean, if you've not read it, please do read it. Fooled by Randomness by the one and only Nassim Nicholas Taleb. So 2 great books for you to read, and that is a wrap on this episode of Paisa Vaisa. My guest, Sahil Bhargava of the Bharosa Club. Sahil, all the best to you guys.
Thank you so much.
Please pass on my regards to Anit and of course your dad. Yeah. Both your parents, I would love to have them in the future. And thank you so much for doing this for our listeners.
Yes, thank you Anupam for the opportunity, and thanks to the team. And we will definitely be back.
Fantastic. All the very best.
IVM